What is going on, guys, and welcome back to another very exciting video. In this video, we're going to be talking about a stock that I do own, and that is Visa stock. Visa is a very interesting stock. They have a large market share of the credit card business. I think it's around 50%, which is absolutely insane when you think of the other players like MasterCard and Amex that are also in that space and how much they own of that space. It's really a very interesting market, having just three big players and the main one being Visa. So in this video, we're going to actually take a look at Visa's free cash flow and do a quick free cash flow valuation analysis on Visa. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Before we jump into all of that, I do want to take a look at Visa's stock chart. So here today, they were trading basically sideways. Over the last 5 days, they have also kind of traded sideways. So the market has moved up in a large way over the last 5 days. And we can see that Visa really hasn't reacted in a huge way. They've only moved up 1.76%. And then over the last month, they're actually up quite a bit. So they're up around 7.29%. And over the last 6 months, up around 6.2%. And we can see here that they bottomed out over the last 6 months. And this is also around their 52-week low of $174.60. And over the last year, which has been a very interesting year for a lot of stocks, we can see that the stock is actually up 3.41%. And that's one of the benefits of owning a stock like Visa. It's not very volatile. We could see, it's had some volatility in here, as earnings and other things have occurred. And then we could see this big drop down in here. But other than that, we could see, over the last year, it's basically traded sideways, which is a fairly positive thing compared to, the market being down at one point, around 20%. And even over the last year, it's down, somewhere around 10 to 15%. So overall, Visa has had a fairly decent year. The interesting thing when you look at Visa is it actually trades and tends to always trade at a higher forward PE ratio than the rest of the market. The rest of the market right now is somewhere between 17 and kind of 20, and Visa right now is actually trading at a 26.81. So it always trades at a premium, and a lot of that has to do with a few different factors. The main one being the stability of the business. Like we just saw, Visa is only down, or actually up 3% over the last year, where a lot of other stocks are actually down over the last year. So that is a huge positive when investors are looking at it. They want to find stocks that do not correlate to the market and also, have a large moat, like we talked about with Visa having around 50% market share in the credit card business. So with that said, let's go ahead and jump into the free cash flow analysis. The first thing that we need to pull is their shares outstanding. So Yahoo Finance for Visa right now, they currently have the shares outstanding at 1.63 billion. And what we can do is we can also confirm that number on Visa's official website. So they have their 10Ks on their investor relations page, and we can go into their 10K, their most recent one, and we can see that as of November 9th, 2022, they had 1.63 billion shares outstanding. So just to confirm that number officially on Visa. The next thing that we need to look at and pull is free cash flow. So again, here on Yahoo Finance, they have free cash flow. It's under the finances cash flow tab, and then you can come down. It's the last one in here for free cash flow, and we can see the trailing 12 months, which is the same as the 9/30/2022. They just recently, I think, hit the end of their fiscal year. So that's why these two numbers are the same. So we have $17.879 billion in free cash flow for 2022. And then we have the 2021 number and the 2020 number and the 2019 number. So we can pull all these numbers over to our spreadsheet. And then we also went into Macro Trends. This is a website that I love to use because it shows a visual of their free cash flow. And we could see all the way back, all the way back to 2009. So overall, again, these numbers seem to match up from what we've seen. So we also pulled this 2018 number, which is $223 billion in free cash flow. Here is the free cash flow analysis for the stock right now over the trailing 5 years of free cash flow. So what we are looking at again is we have shares outstanding at 1.63 billion, and then we have the free cash flows over here. So we have 2022 all the way through to 2018. So again, this is the trailing 5-year free cash flow, and we have averaged that out to $13.27 billion in free cash flow. We have added in a margin of safety of 10%. So that brings our average free cash flow down to $11.94 billion. And then when we run those numbers, basically what we are doing is we are adjusting this number to see where the current stock price is at. So we are seeing what our rate of return is is currently based off the share price. So this number, we're basically moving up and down to get as close as possible to the current share price. And the current share price, like I mentioned, is around $223. So we are right now with a 3.25% return on free cash flow. We are sitting at a $225 share price. So basically what that is stating is we are yielding right now a little over 3.25% free cash flow at the current stock price. And 3.25 is actually a little bit surprising because what you would expect, again, Visa is trading at a high valuation compared to the market. So you'd kind of expect that their free cash flow would actually be lower than this number. So 3.25 is really not, that terrible. It's actually, fairly decent. That's what you'd want out of like a dividend yield. But it gets more interesting when we look at their free cash flow moving forward. So we can basically take these two numbers, so this 17.88 and this 12.22, and we can compound or figure out the compound annual growth rate over the last 5 years. So that's what we're kind of doing over here. We are basically using a formula that's built into Excel. It's a XIRR calculation, and we come up with a compound annual growth rate of 9.97%. So almost 10%. So we put that in and we can figure out, how is the cash flow going to change over the next 5 years? So this is just a projection. Obviously, Visa has to execute their business, certain things have to happen, but it seems like, over the last 5 years, they've been able to execute and get this, 10% compound annual growth rate, which I don't think is really out of the question. If you think about it, you've got 2 to maybe 5% that is built by inflation and just people spending more because the goods cost more. And then, you have additional, efficiencies that they can build into their businesses. So overall, again, they're going from in 2022, $17.88 billion. And then by 2026, we're projecting that they could be at $26.15 billion. And what that does is that comes out to an average free cash flow of $21.82 billion. And we build in, again, our margin of safety, so of 10%. So we are down actually at $19.64 billion. And we actually come out to around a 5.45 rate of return on our free cash flow. And just to equal things out, so we had $221 in here. Just to adjust it slightly and make it equal with the number above, we had $225. So I lowered the required rate of return slightly, so it's at 5.35. But in reality, again, we're targeting a number that is slightly higher than where the market's trading at right now. The market's trading at 223. So if we wanted to get this exact, we'd have to adjust this a little bit down or up to actually get it to 223. So somewhere around 5.25% and 5.5% required rate of return on free cash flow is where we're sitting at right now. So that is honestly a very good number, especially for a company like Visa that trades at slightly a higher valuation and has a very well built out moat. That's a very good rate of return of 5%. And obviously a big assumption with this is the CAGR. So the CAGR, the compound annual growth rate of almost 10%. Honestly, is that reasonable? And in my opinion, I think this is definitely a reasonable number of around 10%. Like we talked about, inflation can factor into this. So as people are, as inflation goes up, people are going to have to spend more. And if Visa can keep their costs down or at least level, we can see that, the business will still grow just because inflation and people spending more on their cards. So that is one factor. And then obviously there are other business efficiencies that they can build in to the business. They can get more people into their ecosystem, try and expand their market share. Again, they own like 50% of the business, the market share. So they have a huge moat around the business that really, just builds out and strengthens a lot of these cash flow numbers. So overall, I think this is definitely a reasonable assumption to have in here for the next 5 years. And just to reiterate, I am a shareholder of Visa, so I do have somewhat of a bias for it. I love the company. I think, having a huge moat around your business where you have 50% of the market share. And also you really only have two main competitors. You have Amex and you have MasterCard. And both of them, have a fairly decent market share. I don't know how well they're going to expand it. I know MasterCard is one I think that Warren Buffett owns a portion of, but I think Visa, they are on every card that I see. And I'd love to be, own the number one player in an area. And we could see, Visa has traded sideways over the last year or so. Like we talked about, it's up 3% 100% over the last year. And we can kind of see that its all-time highs are somewhere around $250. So it's only $25 off its all-time highs, but it is one of those stocks that just kind of chugs along and constantly goes up, and they do pay a dividend. It's a fairly small dividend. I wish they would kind of raise it up and get it closer to, 1 to 1.5%. That would be a very interesting dividend yield for a stock like Visa that has a lot of growth in front of it. But we can also see, the stock does go through periods where it does trade sideways. So 2015, through 2016, we could see, the stock traded around $80 and traded that way for, around a year. So hopefully, you take advantage, or I personally am taking advantage of buying opportunities in Visa when I see them. The problem is this year, we've seen a lot of stocks trade lower. So I have been just buying a lot of other stocks, but when I have a little bit of money and I'm looking at Visa stock, I always put a little bit into it just to kind of build out that position. Because long term, I believe in the company and I think it's going to have a lot of success. So overall, hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.